Welcome to week one of Principles of Financial Accounting. I'm going to take a few moments and go over some of the content for week one. So if you go to your weekly materials and then go down to week one, you'll see the objectives for week one, and then click on week one and then click on your week one content. And you'll see a nice little outline of everything that we'll be covering in week one. And I'm going to be totally honest, section 1.1, 1.2, 1.3, and 1.5 are very straightforward. You should be able to get everything you need to know straight from the readings. Now, sections 1.4, 1.6, and 1.8 are the guts of this week. So section 1.4 is an introduction to the general purpose financial statements. I briefly mentioned the financial statements in my welcome video, but if you click on 1.4 and scroll down, there's a really nice video that explains the financial statements. So if you watch that video, it can probably do a better job than I can do explaining what the financial statements are. Now, there's also some nice pictures of some financial statements in here. Like, for instance, here's the income statement. And I mentioned this already in the welcome video also. Income statement tells us how much profit the company makes. So net profit, net income are the same thing. All you do is take your revenues, or the monies that you have earned, subtract out your expenses, and you come up with your net profit. Of course, there'll be a lot more expenses. Statement of stockholders' equity, that's a short, quick one that shows us change in equity. And then you've got your balance sheet, which is your assets, resources that your company owns, minus liabilities, anything that your company owes, and what is left over is the net worth of the company or your equity. And then one we haven't discussed yet is the statement of cash flows, which tells us where our cash is coming from and where our cash is going to. It's a very important statement because no company can run without cash. So back up to the outline. So if you get a moment, watch that video in 1.4, and I think that'll explain the financial statements for you. 1.6, this is talking about accounts. Let me click on that for us. So take a look at this little spreadsheet that I put together. Right here in the middle is your accounting equation. Assets equal liabilities plus equity plus revenue minus expense. Now I put the first three in brackets because those are your balance sheet, which we just discussed. Second two, revenues minus expenses, that's your income statement. But what these five items are account groups. They're the five major account groups. So in each one of these account groups, you have very specific accounts. Assets are economic resources, or things that the company owns. So every company's favorite asset, or every person's favorite asset, is cash. So cash is an account. So I'm going to scroll down here, and I've got a picture of an account, cash, and you start with the beginning balance, and all this is saying is that the company started with $50,000 cash at the beginning of the year, and then certain items increase or decrease that cash account. So most likely, if you're increasing your cash, you're collecting from customers, and if you're decreasing, you're paying off some expenses. So this is what's referred to as an account. It's a collection of all the increases or decreases in the account. If you go back to that Excel spreadsheet, this is how the increases and decreases happen with debits and credits. So if you notice, the two on the end, the assets and the expenses, increase with debits. The three in the middle increase with credits, and then the decreases are just the opposite. So the normal balance is always whatever increases the account. So that's what an account is, and every single item that the company has some type of account that that measures or keeps track of their increases and decreases. The accounting cycle, if you click on that, you're going to see a nice little video graphic, but it's a lot easier just to click on 1.8, and they've got the accounting cycle right there. So look at the first three: analyze transactions, journalize transactions, and post to the general ledger. Those happen pretty much every single day. So if you think about it, somebody's sitting at their desk, like this young woman right here, and what happens on a daily basis? Here's three examples. You pay your employees, you pay some expenses, in this case rent, or you get maybe some bills in the mail. So that person who's ever collecting this mail, writing checks, collecting checks, what that's referred to is analyzing transactions. Now, when you get that electric bill in the mail, it's not in your computer system yet, so the way you get it into the computer system is to journalize it. So you log into your accounting software, you do those debits and credits that I just showed you, and they end up getting posted to the ledger, and now they're in your accounting software, they're on your accounting books. So 1, 2, and 3 happen every single day. 4, 5, 6, 7, those 4 happen at the end of the month, because what are we doing? Preparing financial statements. And then we look at those financial statements, make a few adjustments, and then create some final financial statements. 8, 9, and 10, well, 8 and 9 happen at the end of the year just once, and then 10 hopefully happens every single day. So that's the accounting cycle. The reason it's a cycle is after number 9, after you close out for the year, you start over the next year with number 1. So this 1.8, analyzing, journalizing transactions, there's also a really nice video that explains how to do these journal entries. It has some graphics here that you can look at, but it also has a video that shows where those graphics come from. And it's way down here towards the end. So that's a good video that'll show you how to do a journal entry, which means analyzing transactions. So there's a lot in week 1, and it is the basis of accounting, so you need to get it down pretty quick so that the next 5 weeks goes really well. I can't get into a whole lot of detail in this video, but if you use the discussion forum, I can answer more questions or even post some more videos if we need more help. So just let me know what you're having problems with.